Millions of Americans spend years paying their car insurance company without ever finding out whether they made the right choice. The problem is not paying too much every month. It is finding out you chose the wrong company on the worst day of your life. This video ranks 5 car insurance companies that are robbing you blind and 3 that are actually worth every dollar. Number 5 to avoid is National General, the worst-rated car insurance company in America. Most people have never heard of them, and that is not an accident. National General is a subsidiary Allstate purchased in 2021. They positioned it as the entry-level option, a way to absorb higher-risk customers without letting that reputation touch the main brand. The largest independent claims study in America scores every major insurer out of 1,000. National General scored 605. The national average is 700. Dead last in the entire country. The government separately tracks formal complaints filed against insurers, and National General generates 3 times more per customer than the national average. Claims that drag on for weeks. Denials of coverage. Customers believed they had. Remember the name, then stay away from it entirely, especially when comparing budget options online. Number 4 to avoid, and the story behind it is almost worse than the score. Liberty Mutual is running a quiet strategy. They own a second insurance company that absorbs all the complaints, so their main brand does not have to. That company is Safeco. Liberty Mutual runs the national commercials. Safeco takes the bad reviews. In that same independent study, Safeco scored 672 out of 1,000, second to last in the country. Their customer complaint rate is nearly double the national average. Customers report the same 2 problems every time. A rate hike at renewal nobody warned them about. Slow or no response once a claim is actually filed. The score of 672 tells you exactly what their version of affordable is buying. Number 3 to avoid, and this one hits differently. Imagine waking up one morning and finding out your insurance company simply left your state. That is exactly what happened to 100,000 people in Florida in July 2023. Farmers packed up and left. No warning, no transition support, no alternatives arranged. Shortly after, they restricted new business in California and pulled back from Louisiana for the same reason. Too many disasters, too many claims. Collecting monthly premiums is extremely profitable. Paying them back consistently is not in the business plan. Farmers then raised auto insurance rates by an average of nearly 18% across their remaining states. Their customer complaint rate sits above the national average there too. They have already shown what they do when things get expensive. They leave, quietly and without looking back. Number 2, to avoid might actually surprise you. Geico made $3.6 billion in profit in 2023. Guess what they decided to cut instead of their commercials? That year, Geico fired more than 2,000 employees. The claims department took the biggest hit. In the months that followed, wait times climbed and formal complaint volumes rose sharply. Geico then quietly stopped offering car insurance in California, New Jersey, and Massachusetts, 3 of the largest states in the country. Customers received no advance notice. They found out when they went to renew. Geico kept every single dollar of those $3.6 billion. They cut the people handling your claim, then left the states where they were most likely to owe you one. The gecko is still in every commercial. The claims department no longer is. Number 1 to avoid, and the company this entire list has been building toward. Allstate was literally fined millions of dollars to keep internal documents secret. They hired McKinsey to redesign how they handle claims, and McKinsey built a 2-track system. Track 1, settle 90% of claims as fast and cheap as possible. Track 2 was for anyone who pushed back or hired a lawyer. Allstate fought those customers in court for years. The internal documents called it the boxing gloves treatment. The goal was to outlast them financially until they gave up. When a court ordered Allstate to release those documents, they refused. A judge fined them $25,000 per day. The fines ran past $7 million before Allstate handed them over. They paid $7 million to keep those slides out of public view. That same year, they raised premiums by 22%. The slogan says, "Good hands." The court record says something else entirely. And Allstate also owns National General, the company that ranked dead last at the start of this list. 3 companies left. Here is what it looks like when the model is built to work in your favor. Number 3, worth your money. This is a company you have probably never seen advertised nationally. Erie Insurance has never run a Super Bowl commercial. They spend that money paying claims instead. Erie has never been publicly traded. No shareholders, no pressure to cut your settlement to protect the stock price. This year they scored 743 out of 1,000 in the independent claims study, the highest in the entire country. For over 10 years in a row, a top 3 position in that ranking. Erie also offers something none of the 5 above can match: file a claim. Your rate cannot go up because of it. That is a written guarantee, not a marketing promise. Erie operates in 12 states and Washington, D.C. If you are in one of those states, the data makes a clear case. At number 2, Amica might be the best deal on this entire list. Here is why. Amica has operated under the same ownership model for over 100 years, owned by its customers, not outside shareholders. No outside investors pushing to squeeze more profit out of your claims settlement. When Amica earns more than expected in a given year, they return that money to customers. When the company performs well, policyholders can receive between 5 and 20% of their annual premium back as a dividend. Number 1 in the national J.D. Power Auto Insurance Satisfaction Study 2 years in a row. That is the same study family that ranked National General dead last. The upfront rate is not the cheapest available. Factor in the dividend and that 12-year claims record. The total cost often ends up lower than competitors charging less upfront. And the best of the 3, number 1 on this entire list, and it is not particularly close. USAA has ranked at the top of customer satisfaction studies for over a decade. There is a reason most people cannot sign up. USAA is available exclusively to military members, veterans, and their immediate families. No shareholders, no obligation to anyone other than its members. Their claim satisfaction score runs 30 to 40 points above the national average. Their complaint rate is among the lowest of any major insurer in the country. They do not exit states when claims get expensive. They do not cut staff to protect a profit margin. They do not own a subsidiary that ranked dead last. If you qualify, there is no data-supported reason to be anywhere else. If you do not qualify, your next call should be to Erie or Amica. Both will deliver what the 5 companies above never designed their claims process to provide. Check the name on your current policy, then decide whether that company has actually earned what you have been paying them every single month.